The average inflation rate over the last 20 years has just been a little north of 2%, but that's on goods and services, right? If you talk about health care, if you talk about long-term care, it's not 2%. It is much higher than that. And listen to this stat. The average 65-year-old couple will spend $285,000 on healthcare expenses throughout their retirement years, according to Fidelity.
Yeah, that's an incredible number, and you've got to have some backstop. Now, some people have enough money that they can just handle those expenses without any problem, and they would do what we call, Janet, self-insure.
Yeah.
They're not relying on an insurance company, and there are people that don't have hardly any money, and they're going to rely on the state. But for those people that are in between, and that is most of the people listening to this show, you're going to have to deal with the healthcare issue one way or the other. And in most cases, you need a backup, some sort of backstop. And that's where long-term care insurance comes into play.
And we would really encourage you to just be intentional about this decision. Some of you are going to look at it and decide that you don't want to do it. That's fine. You've been intentional to seek the information and to make a well-informed decision. That's all you need to do on it. Guys, I'll tell you a quick story on this week. Troy and I had the opportunity to meet with some long-term clients, and they were asking us about some insurance that they had in place before they came here, and they just kept it when they came. It kind of made sense to do that, but it was a cash value type of policy, and they're at a point where when you look at life insurance, they're self-insured. They don't need that insurance anymore, and they're continuing to pay those premiums every month, and the husband was like, I mean, talk me out of this if you need to, but I'm kind of done with this. And I went, okay, you're right on the life insurance side, but do you know that cash value that you've built up can help you pay for your long-term care coverage?
That's right.
And so if you're sitting out there and maybe you're at that same stage of life, maybe you have a life insurance policy that you're questioning whether you need it anymore. Let me say, first of all, don't cancel it until you talk to an advisor, because you don't know what you don't know. Let us help you make that decision intentionally. But there is a possibility that you could utilize that to address your long-term care expenses, and in some cases not have to pay anything else moving forward.
Yeah, those are great conversations to have if you're at that stage of life, but have the conversation.
Yes.
Make an informed decision instead of doing the ostrich thing and sticking your head in the sand and hoping it all goes away. That is a self-perpetuating blind spot.
That's right.
It really is.
Long-term care is such a real blind spot. When I think about the practical application here, meeting with many clients who are close to retirement and really never considered this. And if they are very close to retirement, it may be too late, because health-wise, they may not even be able to be approved for a long-term care policy. So you don't want to do it too early, but you certainly don't want to do it too late if it's something that you need to consider and talk to an advisor about.